Hey traders and investors, welcome back to the channel of Investing Advisors. In this Market Vision series, we discuss about how markets is expected to perform and how one should trade. So without wasting any time, let's dive right in. The Indian markets was on fire today. We saw a strong rally in the major indices. Nifty surged to 89 points, roughly around 1.2%. It was a solid bullish move. Sensex on the other hand jumped 1005 points, around 1.27%, showing strong buying interest. After recent consolidation, the bulls are back in control. Let's look at the sectors who's leading. Oil and gas gained 3.18% due to crude oil price movements and expectations of strong earnings. PSU banks as well jumped 2.44% due to improved reforms and better NPA outlook. Healthcare and pharma sector climbed 2% due to defensive buying interest. Infra stocks also saw 2% uprise due to increase in the government spending push. Auto sector too gained 1.68% after the big downfall and increase in the demand hopes. There is a clear sector rotation that is happening. Value buying is emerging in PSUs and oil sector, while pharma sees safe haven demand. Lastly, global markets seemed muted. US markets overall was tepid. Dow Jones fell 0.11%, S&P was down 0.5%, and Nasdaq saw a pressure from tech stocks sell-off, that is when it was down 1%. European markets on the other hand were mixed. DAX climbed 1.7%, CAC was up 0.5%, however FTSE remained flat. Asian markets also seemed tepid. Nikkei was up 0.38%, Shanghai was down 0.2%, and Hang Seng remained flat. While Indian markets shined, global markets were cautious. So there seems to be a Fed worry and earnings season that is keeping the traders on edge. Now let's discuss from charts as well as open interest what the market suggests for tomorrow's trade. So we are in the Nifty chart. So yesterday we had discussed that market had given a big downfall and we would have a strong support at this level. So market towards the mid of the day had recovered from this level, and roughly there was a retracement of around 40%. Now since yesterday there was a news that Indian Army has taken off the INS Vikrant and the sea related warships back to our zone. That is when there seemed to be a positive news, and then market suddenly rallied today, and it has exactly closed where it started consolidating. So this range again becomes a crucial thing, 24,400 odd levels. Once Nifty crosses this level, then immediately we would approach 24,800 levels um, as the first resistance, and then we might stay for some time in this range, and then once Nifty breaks out on higher side beyond 24,800 odd levels, we would see a swift up move coming in. So we have to be cautious until 24,800 odd levels. So if there doesn't come any bad news of the war kind of situation, then we are definitely expected to gradually move towards the higher levels of 24,800 odd levels just in a week's time, with the start of the May month. And then if no negative news comes in, then we will start climbing on the upper side. So overall, on the downside, we have to have a close stop loss somewhere around at 23,800 odd levels, from where we saw this reversal and a big up move that we could see today. On the higher side, we have to be cautious, somewhere around 24,800 odd levels. Once this up move is easily taken off, then we might see a swift rally on the higher side coming in, which can lead towards 25,500 to 26,000 odd levels. So this is surely not going to be quick. So we might spend some time, here until we gradually cross 25,200, and then next would be 25,800 to 26,000 odd levels. So week by week we have to see if there is a selling pressure on the higher side, or there is more buying momentum and support that gets created at every higher level once the Nifty moves. So if that is the case, then we have to keep tracking closely on the higher highs that Nifty is expected to take, and then accordingly take all the positions majorly towards the long, with the strict stop loss bias of around 23,800 odd levels. So this is what chart suggests as of now. So let's see from tomorrow's trading perspective how the market is expected to do. So as long as it opens on the higher side and trades above this zone of 24,300 odd levels, then we might take only positive trades. If Nifty starts trading below, or maybe comes in this particular range, then we have to be cautious and not take any maybe long trades. So it is expected to remain maybe volatile until there is a clear indication of either a long side or short side. Now let's look from the perspective of open interest. So on open interest too, we see the tight range bound is expected to be there. So Nifty is expected to trade in the range of 24,000 to 24,500 odd levels. Once we cross beyond 24,500 odd levels, since there is no immediate strong resistance, we might swiftly move towards 25,000 levels too. So even the charts very clearly indicates that, and then until the 30th expiry, which is just 2 days away, also expects the same thing. So we might maybe trade range bound tomorrow, and then post that we might see a significant rally coming in, either on the upside or maybe on the downside. On the downside, at every 100 points level, we see a good support coming in. On the higher side, there is only one support at around level of 24,500 coming in from the call writers. Beyond that, there is no significant open interest positions, and we might straight move towards 25,000 odd levels. So on the last week expiry, that is on 30th April, we might see a good volatility that is expected to come in, because markets overall had traded in certain range of 24,000 odd levels till 24,500 previously. Now if it breaks, it has to break either side. So it was unable to maybe break down below 24,000 odd levels on closing basis. So now it will try to target and move on the upper side. If there is no resistance that comes in, then we might cross beyond 24,500 odd levels on closing basis. Once that happens, then be ready for the upper side movement to come in until 25,000 odd levels till 30th April expiry, and then accordingly how the open interest positions get built for 8th May, we will see. So overall on PCR, it is 1.2, which is positive. At the money as well, it is 0.85. Again, this is quite positive. Now let's talk from the perspective of Sensex. So we saw a strong bullishness that has been seen in this candle. So it has almost covered the previous day's candle. So it is expected to be positive from here on. So yesterday we had discussed that this is the first support that Sensex is expected to take, and then it exactly did the same. Came here, took a support at around 78,800 odd levels, immediately moved on the higher side, and today opened gap up and then from this it started continued trading on the higher side. So there is good positivity that can be expected in Sensex. Tomorrow being the expiry for Sensex, we might see some volatility coming in, but from the open interest perspective, when we see, we will get a clear indication as to how the markets is expected to behave. So looking from the charts perspective, this close as of today is quite bullish and positive. So from here on, the immediate resistance that Sensex is expected to have is at 82,000 odd levels. So till then, it is a clear biased upward movement that can happen until 82,000 odd levels. So once tomorrow Sensex crosses above 80,000 200, if it opens and sustains and trades above 80,200 odd levels, and even the close happens roughly around 80,400 to 500 odd levels, then that should be considered as positive, because 2 consecutive days, despite the lot of sensitive news flowing around because of Pahalgam war, and maybe some firing happening between India and Pakistan. Despite that, if markets are trading on a positive note, then we have to take bullish moves as long as Sensex sustains 78,800 odd levels. The moment this zone Sensex comes in and breaks below 78,800 odd levels, we have to cut all our long positions and start taking trades for the on the short side. So this is what is the trade action that we have to take. Now let's see from the perspective of open interest. So on the lower side, so we at every 500 points and in between at all the 100 point levels, we see good buying interest or momentum that had built today. And at every lower levels we see strong support coming in. If you see at 79,500 odd levels, and then even at 79,000 levels. So tomorrow we might not see any downfall that is expected to be seen in Sensex. Rather we would trade and close above 80,000 odd levels itself. So now the immediate resistance that we can see is at 80,500 odd levels, which if the Sensex remains quite bullish and positive, can also be taken down and might approach towards 81,000 odd levels too, because once 80,500 odd levels is taken down, we do not have a strong resistance from the call riders. So easily Sensex can move towards 81,000 odd levels. So if we have to talk from the perspective of tomorrow's trade range, then 81,000 to 79,800 is what we are expected to trade in. So overall, we might trade in the range of 80,000 to 80,500 as well, or if 500 is taken down, then we might approach towards 81,000 odd levels. So overall, on PCR we see 1 which is positive, and even at the money it is 0.77 which is positive. So from the perspective of tomorrow's expiry, already since there had been a volatility in Sensex as well as in the major indices, so we might see not much big moves that are expected to come in at least for tomorrow's expiry, given the simple fact that the VIX is on the higher side. So whenever VIX is high, option writers will enter into, and they will try to eat up the maximum premium that they can collect. So if the volatility comes in, then it becomes really difficult for them also to manage their positions. So we might see a calm or composed kind of trade movements that would be seen tomorrow. So expect range bound trade in between 79,800 odd levels to 80,500 odd levels in the initial stage. If 80,500 breaks, we might approach towards 600, 700, and gradually toward crossing 80,800 odd levels too. So this is what is the tight range in which Sensex is expected to trade tomorrow for the expiry. Now let's talk from the perspective of Bank Nifty. Even Bank Nifty had almost covered this previous day's overall candle. So Bank Nifty also had closed on a positive note. So for us, the first resistance for Bank Nifty is around uh, 56,000 or maybe 55,800 odd levels, because this is the zone from where we did not maybe in the initial stage did not touch 56,000 levels, but later we touched 56,000 levels and then suddenly saw a big downfall coming in, right? So now our first resistance would be 55,800 odd levels, from where we started seeing that selling pressure coming in, and then roughly around there was a fall of 1800 points from the top of 56,000 odd levels, and then we saw a swift recovery coming in just in 3 days time period. And this close of today is quite bullish and positive. So if Bank Nifty tomorrow starts trading above 55,400 odd levels, then it is considered as positive, and we will quickly move towards 55,800 odd levels. Once this gets crossed, then easily we might again cross the all-time highs of 56,000 and above levels on Bank Nifty. On the lower side, this is what is the resistance that we will have to keep as of now, roughly around 54,500 odd levels. The moment Bank Nifty starts negatively trading and falls below 54,500 odd levels, that is the first indication for us to be cautious and exit all our long positions and start taking the short positions or sell call kind of positions. So as long as Bank Nifty trades above 54,500 odd levels, there is not much to worry. Of course, yes, there is a news that is lingering around the war kind of situation between India and Pakistan. That might happen, but if that is expected to happen, we can very clearly see that on charts. So that is when presently the charts have been showing all the bullishness. So we have to see what the charts suggest and take trades accordingly, and not have uh, some expectations about the downfall that you expect maybe any of the indices to come in. uh, Traders should not trade that way. So whatever you see on the screen, just go ahead with that. So as long as the chart on Bank Nifty is concerned, it is closed quite positive and bullish. So we should take the trades, positive trades, if Nifty starts tomorrow trading beyond 55,400 odd levels. So once that is done, it can easily first approach 55,800 odd levels and then cross even 56,000 levels to hit all-time highs. Now let's look from the perspective of open interest. So as you could see, at 55,000 odd levels, we see strong support from the put writers, and also at 55,500 odd levels, there is a good support from both put writers, and there is also a selling pressure from the call writers, acting that as a strong resistance. But yes, once Bank Nifty crosses 55,500 odd levels, as you could see, there is no single big resistance that is there. So we might easily approach 56,000 levels and beyond. uh, but on the other side, if you look at downside, you have a strong support at 54,000 out levels, then you have again at 53,500, and a very big support is there at 53,000 odd levels. So at least for the uh, May month expiry, 53,000 remains the crucial zone for Bank Nifty. Below this zone, that means there is a negative scenario that has that is expected to be seen in Bank Nifty. So if for the entire month 53,000 is held, that means we are positive and should trade for the long side. So now presently, if we see, since Bank Nifty has a monthly expiry, so we just have to follow the charts as well as see the open interest movements on daily basis, and then take accordingly the um, trades on the bank nifty. So for now the trades suggests positive, and once 56,000 odd levels is crossed, there is no immediate resistance, so we might continue to rally further too. On the PCR front, overall it is 1, and at the money it is 1.02, so which is quite bullish to positive. Lastly, on FINNIFTY. So FINNIFTY had been, we had seen little sell-off coming in at the higher levels, and then this consolidation or sell-off continued for 3 days, and today we saw a good, buying momentum, though it did not close above the previous day's close. So that means that there is some pessimism or negativity that is, expected to be seen in FINNIFTY. So once FINNIFTY crosses, this level of 26,600 odd levels, then we might consider that the bearishness on nifty has subsided, and we can start taking the positive trades, and remain on the long side for FINNIFTY. So until this zone we have to trade cautiously. We might trade range bound, but there are high possibilities that we might start trading below 26,000 odd levels. So for us the immediate support is 26,000. Once Nifty starts trading below this, the next immediate support would be 25,700 odd levels, and then if it is unable to sustain, then we might see a big downfall coming in, and we might even cross below these levels of 25,000 odd. So FINNIFTY is not that showing the bullish signs. So until charts clearly indicate on the long side, we will have to be cautious on FINNIFTY. So as long as we start trading above 26,500 odd levels and touch towards 26,700 odd levels, we will continue to trade in the range bound scenario. So either on the upper side or downside, once it takes a decisive move, from there on we can start taking the positions accordingly. So compared to other indices, somewhere there is still the weakness continues on FINNIFTY. Now let's look from the perspective of open interest. So there is a strong support at 26,000 levels for FINNIFTY. And then on the higher side, yes, there is resistance at 26,500, and there is a another resistance at 27,000 odd levels. But yes, these may not be as strong that we could see on the put side. So put writers have been holding very confidently at 26,000 odd levels, which is roughly 300 points down, right? Despite kind of uh, weak scenarios or volatile kind of scenarios, still the put writers have been holding very firmly at 26,000 levels. So that means our immediate support should be 26,000. Once FINNIFTY gets broken below 26,000 odd levels, wait for 25,800 to break. Once it breaks, then we might start taking the short positions on FINNIFTY. So from the perspective of PCR, it is 5.5, which is quite bullish, and this is majorly coming because of the very closer strikes, majorly because of 26,000 strike is what we could see higher PCR. At the money it is 1.13, which is again quite positive. So though on the charts, FINNIFTY that doesn't seem to be quite strong, but on the open interest perspective, 26,000 levels holds, or gives a firm indication that FINNIFTY may not uh, drop below 26,000, at least in the initial stage. So till then we will trade cautiously in FINNIFTY and give a strict stop of 25,800 odd levels. So once that gets broken, only then we will take short positions. On long side also we have to remain cautious, because any point in time we might see a downfall coming in. Now let's talk from the perspective of FII and DII data. So FIIs on the index futures have been, holding short positions to the tune of 23,000 contracts. On stock futures, they have added more, and net they are holding 17.32 lakh contracts, which is quite bullish and positive. On call options, they are long by 45,000 contracts. On put options, they are short by 37,000 contracts. So net FIIs are long on index options to the tune of 81,685 contracts, which is quite positive. On proprietary traders, on index futures, they are mildly bearish. On stock futures, they are holding minimal positions to the tune of 3 lakh contracts. On call options, they are massively long with 1.05 lakh contracts, and on put options, roughly 60% of the call positions they have been trading on the short side. So net um, even FIIs are long because if they are expect if they on put side they have taken short positions, that means they expect the markets to trade positively. So even proprietary traders are bullish to the tune of 1.66 lakh contracts. Now talking from the perspective of uh, client. So on index futures, they are mildly short with 27,000 odd contracts. Um, on stock futures, they are long with 16.3 lakh contracts. On call options, they are massively short with 1.5 lakh contracts, and on put options, they are long by 47,000 contracts. So net retailers are short by 2 lakh contracts. On the other hand, both proprietary traders as well as FIIs are massively long. So whenever you see both FIIs and proprietary traders are long and DI clients or retailer traders are short, that means that we might see positive trend coming in, and the gainers would majority of the times be FIIs and proprietary traders in their view, because they are the market makers. That is when they can move the market to gain for their positions. So overall we have to see how the expiry is expected to happen both on Sensex tomorrow and then next day Wednesday on Nifty. So on the stocks perspective, in cash market, DIIs have invested 2,818 crores, and FIIs have also invested or taken long positions for 2,474 contracts. Sorry, crores. So as long as you see either of the institutions are positive and have been able to absorb the negativity of the other institutions, till that time we can expect the trend to continue on the positive end. Now today you see both FIIs as well as DIIs have been long despite the bad news that has been circulating. Still they have been continuing to buy in the cash market as well as in the options as well as in the futures. So that is a clear indication that markets are poised to move up, and when it starts moving up it would give a sharp rally on the upside. So this is a very clear indication. So that is when we always tell, trade what you see on the screen and not what your um, expectations are towards the market. So there would be a lot of news that would divert your mind or your insights towards the market. Just watch the screen and it will give you a clear indication as to where it is headed towards moving. So key takeaways for today is India has been outperforming because of domestic liquidity as well as FII pumping in. Also there is an earning season which seems to be optimistic. That is also one of the reason why the markets are being driven on the higher side. So that's it for today. If you liked our insights and the way how we analyze the market, and if you enjoyed this video, please smash the like button, subscribe for our market vision series, and hit the bell icon so that you never miss a market update from our end. So thanks again to watch our video. Please give a thumbs up if you really like, so that we get motivated and do better day in day out for you. Till then, happy trading.